Starting, all attendees are in listen-only mode.
All right, it's yours, Boris.
Thank you very much. Thank you, guys. Let me get on the screen, say hi to everybody. Where's my camera? You guys seeing me? Let me see. There we are. All right. Hey, guys. Good evening. Good morning. Good afternoon, wherever you guys may be. Very, very excited to be with you for really like one of my favorite webinars right now, the commodity webinar. We're going to talk about trading gold and oil. As a matter of fact, I'm just kind of fooling around. We had a tiny little opening session signal here in gold. I took it. We'll see if it works. It doesn't really matter because we're going to talk about how the system I'm going to show you really is so robust that it can absorb a whole bunch of losses and still give you winners in gold. But that's really not been the case. It's just been all winners in gold for the last couple of days. We're going to talk about that. We're going to talk about the fact that look at gold, 2,300, baby, 2,300 in the futures. That is unbelievable. That is, I believe it's the fresh round number high. Just took it out basically on the Asia Open, and I got a buy signal off the little retrace here. It's actually just turning positive now. So we'll let it float, see how it goes, and then I'll describe it to you and talk to you a little bit about it when and if it resolves. In the meantime, hi everybody. Everybody sees me. Everybody's got good sound, right? Let me just make sure I got like good video here, right? Okay, I'm gonna be looking in the camera here. Somebody in the go-to webinar, just let me know. You guys hear me okay? You guys seeing the screen? Everything is good. Yeah. I don't see anybody typing, so hopefully you guys hear me. All good? Yeah, very good. Okay. Okay, good sound, good video. Ryan, good to hear you. Where's everybody from? Type in, tell me where you guys are coming in from today, whether it's nighttime or morning for you guys. Actually, if any of you trade gold now, I'd love to know. We're going to talk about that. But before I talk about all this stuff, and I'm going to take myself off the screen for a little bit, and then I'll come back. We'll talk about everything else a little bit because, frankly, it's distracting me to see this. Let me get into the show and go into present mode. Present full screen. Present. Oh, what's going on over here? Why is the music going on? Kathy, why is the music going on? Okay, looks like if I go into present mode, the music is on. I have no idea how to turn it off, guys. So, music is on when I go to present mode. I'm just typing Kathy. All right, you know what? We're gonna do this without music because we're gonna do this, halfway. My apologies, guys. I'm not giving you the full screen, but I think you guys see it pretty well. Let me see on the audience view here if you guys seeing the presentation. Yeah, you're pretty good. it's just PowerPoint slides, doesn't really matter. But you know, if I turn this into present mode, Kate just turned on some kind of music. I have no idea what she did with this thing, but it is truly the single most annoying thing in the world. So God knows we certainly don't want to be listening to that in the background over me talking. So I want to talk a little bit first, before we talk about trading, before we talk about gold, before we talk about oil, before we talk about strategies, just trading in general, right? And a lot of you who may be coming new to trading, I'm actually interested. How many of you are sort of new to trading? Really haven't tried it, certainly maybe new to futures. Just type in new to futures. Love to see it, because I think there's so much misunderstanding about what trading is all about, and I kind of want to put some of those myths to bed today with you guys. So first order of business I kind of want to ask everybody is, here's a question. Let's say I'm going to give you a 100% guarantee, 100% guarantee that I'm going to take $1 from you, and in 20 years, I guarantee you're going to have $1 million. That's a pretty good guarantee. I take $1, I guarantee you in 20 years, you're going to have $1 million. You'd be like, you know, I've signed up for the savings plan. I definitely want to invest. I want to do it. Oh, good job, Costa Rica, Netherlands. Nice to see you guys. So the question, you know, and this is what everybody always tells you about long-term investing. It's all about the miracle of compounding. It's the eighth wonder of the world. Einstein said it was, you know, the greatest thing since sliced bread. Blah 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 blah. Okay, here's real math. Real math. No nonsense. 15 years into this 20-year journey of $1 million, how much money? Type it in. How much money? And those of you who know the answers, do not cheat. I don't want to see the actual answer. And if you give me the real answer, I know you're cheating. How much money are you going to have after 15 years of scrimping and saving, compounding towards $1 million? What do you think is going to be in your potty? How much you think? Just guess. 50,000, 100,000, $500,000, 15 years. Should be at least $500,000, right? I mean, it's 3/4 of the way there. How much money you think is going to be in the account after 15 years of compounding? Guaranteed that you will make $1 million. Guaranteed. Which just never happens in real life, right? What do you think? Anybody want to put in? Chime in here? All right, while you guys are waiting, you guys are typing in, let me tell you, you're going to get a whopping $32,000, okay? $32,000. Think about that. Yeah, you guys typing in 100, I would say 150, 300,000, right? $32,000. Look how pathetic that is. What this basically tells you, and what you need to understand about all this compounding math, is that you might as well not save. Okay, I know that's sacrilegious, but if you think about this, if you didn't save for the first 15 years of your life in this $1 to 1 million cycle, right? If you just spend it on, you know, drugs, women, and gambling, you know, and just burnt all your money, and then in the 15th year, you know, you worked hard, you saved, you made $32,000, you'd be in the exact same position. That $32,000 is what's going to compound out in the next 5 years to like $1 million, you know, at this massive doubling compounding rate. So bottom line is 97% of all benefits of compounding in this example come in the last 5 years, and that is not an exception to the rule. Basically, they tell you, you know, oh, you know, if you start saving from the time you're 20, at the time you're 65, you're gonna have $1 million. Well, at the time you're 50, you're basically gonna have $100,000. It all comes in the last 10 years. You might as well just do nothing and, you know, drop 100,000 and then let that compound out from 50 to 65. So I just think it's fascinating how, you know, they always say there's lies, damn lies, and statistics, and nothing lies sort of more than compounding math. And the reason I bring this up is because it's very deceptive. That's what people always tell you. You know, you need to invest for the long run. Well, let me give you another example of math for the long run. So, you know, you're investing into the stock market, which is where everybody invests into, and the first year you lose 45%, right? Typical stock markets go up and down. Sometimes you have a bad year, you lose half the investment. Fine. All right. The good thing about stock markets is they rebound. So the next year you rebound, you make 55%. Now this is the only other quiz I'm going to give you. So you lost 45%, you made 55%. Let's say you started with $100,000. After 2 years, who wants to tell me how much money is in your bank account or in your Schwab IRA or in your TD Ameritrade account, in your savings account? Anybody want to guess? You lose 45 the first year, you make 55, you start with 100,000. How much money is in the account? Anybody want to drop the number there? Is it 110,000? Is it 105,000? All right, Franz, you're disqualified because and Adam too, because both of you must have cheated on the answer. But yeah, no, the answer is actually a whopping $85,000. You started with 100,000, now you're a proud owner of $85,000. Stu gets the win because he seems like the most accurate, closest one. So my point is everybody is kind of listening to this, and hopefully you're shocked, you're shocked straight into understanding what's going on, is that, investing is not all it's cracked up to be. Yeah, it's great. We all do it. I do it. Everybody does it, blah, 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 blah. But it's not a guaranteed path to success. It's also, has a terrible, terrible side effect of what's known as, oh my God, it's now I'm blanking on the actual word. It's basically what the sequencers. It has a side effect that's known as a sequence risk. So in other words, if you start out the first 10 years of your life, the stock market is all hunky dory, and you make all this money, it doesn't matter what happens in the next 10 years of your life. You pretty much are set for the rest of your life. But if you start out like in retirement, and the first 10 years of the stock market are really horrible, and you lost like half your investment, it doesn't matter what happens in the next 10 years, you're never going to make your money back. So so much of investing is really, really contingent on luck, much more than they make you believe, right? And I think that's really the important part. I mean, that's why everybody's here, because I think deep down, everybody understands that you can't just give your fate to the market gods, because they will laugh at you. Just like the Greek gods, they will laugh at you and they will torture you. And so you really want to develop skills that completely avoid all of this nonsense, that give you the ability to be able to earn money, good markets, bad markets, up markets, down markets, because it's not contingent on market regime. It's not contingent on which asset is in favor. It's contingent on lifelong skills that, excuse me, guys, I'm recovering from a cold, so my apologies if I sound really scratchy. It's dependent on lifelong skills that can be applied to any market, any time, because they're really trading on a micro, short-term level, where you actually have a lot more control than you think. I mean, trading effectively, at best, day trading, what it does is it turns investing from a lumpy game of uncertainty into hopefully a steady stream of income. That's really what we're all about. That's really what our friends at Apex are all about. And the great thing about it is, of course, is not only does it give you a chance to create a steady stream of income, it does so at an incredibly defined risk level, where your participation in whether you're going to be able to get income or not, it is not dependent on how much money you have in the bank, which is really, really amazing. So one of the things I think people don't appreciate is just how steady day trading is. So there are two big high-frequency trading shops. One is Citadel Securities. The other one is Virtu Financial. Now, Virtu Financial went public, so they have to actually disclose, their trading record. And it was an embarrassment. It wasn't an embarrassment because it was bad. It was an embarrassment because when they actually disclosed their trading record, it almost felt like like they were cheating. They weren't, in no way. But they basically showed that they had 1 day of trading losses out of 1,200 38 days. That's like a 99.9% win ratio. Now, of course, none of us can do high frequency trading. They have microwave towers and fast computers and so on and so forth. But the point being is that on a intraday day trading level, the patterns of human behavior repeat themselves over and over and over and over again, and you can exploit those patterns well. And as long as you understand how those patterns can be exploitable, they become incredibly powerful in your hands. So hopefully this just kind of whetted your appetite as to why I am so excited about day trading as a avocation. It doesn't have to be a job. It can just be an avocation, which is actually what I think it should be. It could be a side stream. It could be an extra gig. It could just be a hobby. But whatever it is, it's an incredibly intoxicating, fun thing to do that, if done well, can pay you money. So before I kind of get into commodities and strategies and everything else that I want to talk about, I think, sorry guys, what I want to just take your attention to, because many of you are probably new, there are two primary commodities, right? And they are gold. Gold symbol is GC, right? GC. And I'm going to Google Chicago Mercantile Exchange, right? GC CME specs, or right over here. Let me see if I Google this. So if you do GC CME, which is gold, right? And then you hit the CME contract specs over here. Let me see if I can. Why is this not going? Okay, here we go. Right? You get onto the Chicago Mercantile Exchange website, and what I want you to do is just simply hit the volume open interest. What's going on over here? Quotes. Oh, you know what? That's funny. Okay. Oh, I know why. Oh, that's funny. Okay. Well, trust me on this during the day. I know why this is not showing. What this particular page shows you, what I was going to show you, is that what you're going to see is that June month during the day, because right now we're obviously in the overnight session, so they're not reporting the volume in the overnight session. The June month is the one that has the most, like 200,000 contracts. The reason why that's important is it doesn't matter, what month you want to trade. What matters is the month that has the most contracts is the one that you want to trade. What I mean by that is that when you want to find out what the front month is in any commodity, you want to go to the Chicago Mercantile Exchange and just do nothing during the day. Obviously, this is, we're in the overnight session, so they're not reporting the volume right now. They'll do so in a little bit. You want to see the 1 month that has by far the most volume. That's the month you want to trade. So for gold, it's June. For oil, which is CL, the contract for oil is CL, it's May. You guys are gonna have to trust me on this because I can't show this on the website. But the point is, it's a good hack if you're ever wondering, hey, what month should I be trading? Because it's very, very important to trade the most liquid month whenever you're trading. You just want to go to the Chicago Mercantile Exchange during the day, and then you'll see the volume on the contract, and then you'll be fine on that. So anyways, coming back to all right, Kay is going to let me know when I'm done. Okay. Kay is going to try to delete that music so we can go to full screen. So what I want to kind of run you through is that before we get into the strategies, you have to appreciate one fact about the way I'm going to show you how we trade. You don't have to do it the way we do it, and I'm going to show you a couple of ways that are not necessarily this particular philosophy. But if you want to trade the way we do and be successful, many of my my traders have already passed the Apex test, and I've actually gotten multiple funding accounts on a trading close to $1 million already in months. Click settlement. Let's see. Click settlement. Maybe you're right. Let me see. Did I hit settlement? Oh, settlements. No, nothing, man. Nothing. I think it's prior day. I don't know what's going on here. Just trust me on this. We don't need to get hung up on. We don't need to get hung up on this. I don't know why they're not. Maybe it's overnight Chicago and they just decided. They're redoing the ideas. So for right now, the purposes right now, gold is June, oil is May. Those are the months we're going to be trading. But the more important point is, how are we trading this? I like to trade multiple times into the same setup. So if my first setup fails, I'll wait for the second iteration of the setup, go twice as large. That fails, I go third iteration of the setup, go 3 times as large, right? Now, there's a limit to this, and there's lots of different limits of how you want to trade it. And we'll talk about what kind of limits you want to apply. But the point being is, sort of the more attempts you make, the better your odds become of winning. So if you just assume that every single trade is a 50-50 bet, right? 50-50 bet, just on an even, heads up, buy, sell, you don't have any edge whatsoever, then 5 losers in a row is essentially a 1 out of 31 probability. So 1 out of 31 trades, or 1 out of 31 sequences, not 1 out of 31 trades, 1 out of 31 sequences will create a sequence of loser, 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 and that is a 1 out of 31 probability, assuming that it's a 50-50 bet, right? However, if you give yourself just a tiny, tiny, tiny little edge, right? Sorry, I gotta go this way. Oops, what's going on over here?
You can try going full screen now.
I can? Okay, thank you. Let's see if we can do this. Okay, let's see if this works going forward. Yeah, beautiful. Okay, so, however, if you have just a small edge, 55-45, right? Let's say your setup is like 55% accurate, even 53% accurate, 53-47. The odds of losing 5 times in a row become 1 out of 52, right? 1 out of 52. So 52 minus 31, that's 20 possible winning trades out of 50. If you simply just assume it's kind of, the market's kind of an even bet game, and you just have a tiny, tiny, tiny little edge. It's basic statistics. It's based upon the idea of every trade is independent. There's conditional probability, meaning that you're taking trades consecutively, and of course that's not how markets work. Markets are not independent. People react, and if you have 6 or 7 down moves in a row, the probability of an 8th being up is really quite strong. It's much stronger than a 50-50 bet, because people are aware of the fact that 7 other hours or 7 hours of the days or 7 other minutes you've had huge selling, so they're reacting to that like everything else. So generally, the more attempts you make at something, the better you have in the ability to profit in the long run. Okay. So I'm going to share with you 2 strategies that utilize this particular approach, but also don't have to. But let's just hold on to the idea of multiple attempts, because even if you want to do multiple trades, I want you to appreciate the incredible power of multiple attempts, especially in the ability to pass the apex test. I'm going to talk a little bit about that once we talk about our strategies. So on my favorite kind of trading strategy for gold and oil, we call it BIG. And basically, it's very, very simple. Really, really simple strategy. Most really good strategies are actually quite simple. The art and the skill lies in knowing when to apply them, right? So step number 1 for gold and oil, GC, which is gold, GCL, which is oil on the future side, we're looking between, I'm going to give you New York Times, okay? I'm going to give you all New York Times. You can translate them to GMT or wherever you're at, but Just remember, I'm giving you New York Times because I live in New York, and the world revolves around us. This is a trade you want to do between 3 o'clock in the morning and 12 noon New York. And what's interesting about this is basically that's sort of like the opening of the European session, but more importantly, Asia is very participatory in that. Middle East is very participatory in that. Why? Why is it important? Well, because people love to trade gold in Asia. People love to trade gold in the Middle East. People love to trade gold in Europe, Actually, US is the place where gold is kind of just coming back into vogue right now after being out of vogue for so long. But in those places, people love it. And during 3 a.m. New York, that is a very, very prime time for those people to deal. So that's why we keep those hours as a key set, right? Now, step number 3, we're going to look at the 1-minute chart for our triggers. And step number 4, we're going to make sure that our own proprietary indicator is bullish on the 1-hour chart. In other words, is gold or oil in a bullish trend on the 1-hour chart? Only then are we going to take long trades off the 1-minute chart. And we're going to take them basically on a very, very simple 10-period SMA to 100-period SMA crossover. Once 10-period crosses over to 100-period, we're going to take that trade and we're going to trade it with a 30-tick stop and a 32-tick take profit. The reason we give ourselves 2 ticks of take profit is just to pay for the commission. It's actually more than pays for the commission, but I like to have just a tiny, tiny positive spread on this move. And what that means, by the way, that's basically a $10 per tick, right? So if you were doing one large contract, that would be $300. If you're doing one micro contract, that's a $30 trade or a $32 win against a $30 loss. So that's pretty much it as the biggie. That's our biggie trade. And I'm going to show you. Let me just escape here. Oops. And let me see if I can pull up big here on our still slowly floating my gold trade here. Let's look. I'm going to pull up. We have in our room proprietary indicators, which I developed myself. I wrote myself. And we're going to go to gold. Sorry, I'm just going to set this up. It needs to be set up to gold. So as you can see, the indicator allows you to create anything you want: stops, targets, what time of day you want to go, how many attempts at a trade you want to make. In this case, we're going to make 5 attempts at a trade. What hours you want the whole thing to start, and whether you want it if you set up, if you say choose GC, it will automatically set the template for gold. Okay. Oh, I know why I'm like, why is this on the 6? Sorry, it has one other little function that I put in here. It has the supersize me function, which I'm going to show you a little bit later. Anyways, okay. So here's what I want to show you that's very, very cool. You see how the chart changes color at 3 o'clock New York, which means now it's active time. And right at the beginning, right over there, they start buying it. Here's the buy signal. They buy 22.75s. And as I said to you, we like to trade it with a 31 or 32 tick profit and a 30-point stop. So in this case, literally the first trade, and we're done. And we're done, right? So it's super easy. Now, this particular trade, I only want to do 1 trade per day. That's why it's called the big trade. And we're just looking for that one big move. Now, a lot of things really, aligned our way today. We had a very, very strong bullish trend. It was literally 4 days old. The trade hours are over here. It tells you the configuration that that it's gold, that it's very, very bullish, and it really, really worked super, super well. Just the first trade got resolved. If you wanted to see how the other trades went through the day, then the second trade failed, but then the third trade did well, and then I think we had, and that's it. That's pretty. Oh no, yeah, that's it. That's it. That's all we had. By 12 noon, we're done, right? In this particular configuration. But what I'm interested in is just this trade. It's done, right? Now let's go to yesterday, which was April 1st. It was not a great day. Now, this is the thing you want to appreciate. We don't want to trade this every single day, and we certainly don't want to trade this when Europe is on a holiday. Because remember, gold is a European instrument. I know everybody thinks, hey, everything is American, but gold is a much more of a European participation instrument. So you may not necessarily have wanted to step into gold in Europe. Because when Europe started, there was very little participation. The first trade failed. You would have gotten stopped out. The second trade failed, and it took you up to 3 trades, basically, when America came on board. And we were finally Americans did not have Monday off because we don't have Easter Monday off. There was a lot of participation. It took 3 trades. It was a lot of work. You still would have made money. This would have still resolved it because you were doing 1, 2, 4. So this would have paid for all the losses, and you would have been a winner. But it was kind of an unnecessary risk, right? It was unnecessary risk to take this because it was a really non-participatory day. And that's something that you always want to be aware of when you're trading these things. You absolutely want to be, involved. On the other hand, Easter Thursday, that was fine. Everybody was still in play. This was like the last day of before everybody went on a holiday. The first trade failed, but the second trade resolved nice and quickly. You see how nice and quickly it resolves over here? And it was just, a very, very cool, clean trade. And then I think we can go back. I just want to go back one more with you to Wednesday. I really haven't looked at this. And you see, by the way, this is the power of having a bullish trend. Gold is in a bullish trend, and it can just pick up these amazing, quick trades, and make money. So whether you made it hard on yourself or easy on yourself, you really had like 4 straight days of pure winning trades in gold, right? Now, I just want you to remember these numbers because we're going to come back to them, and I think you're going to find it fascinating. So it's $3, $300 per one large contract. That's what I'm going for, right? Or if I want to, it can go into what's called supersize mode, which means it can try to go for $6. So in this particular case, I'm long here, and you see it goes for $600, 6 points in the in gold. And actually, every single day it also did if you felt super strong about it, you'd go 6 and 6. So you'd have a 6 stop and a 6 target and try to go for this. But you honestly don't need to, because I'll explain to you something very, very cool about gold. You don't need to supersize this unless you were sort of going to be involved in trying to trade this for a very long time. So just remember that it's a $3 trade, 300, and if it's 10 contracts, it's 3,000. Just remember that, because we're going to come back to this point in a little bit. So that's big on gold. We can take a look at big on oil, which also is a very, very sort of European product. What I mean by that is a lot of the activity in gold, in oil, happens in Europe. Now, in this particular case, today was just sort of a bad luck situation. We didn't have any trade early in the morning because the crossover actually happened earlier. Like in early Asia, Middle East, they started buying oil, and it was, and it was there. Now remember, oil is pretty bullish, not as bullish as gold, but it's still pretty bullish trend. Very, very positive, still doing well. Now, oil, as opposed to gold, has, I think, these 2 really interesting halves, or kind of like 2 parts of the day where you can make money in oil using big. Again, Monday, European day. You see how terrible. No participation, no volume. You don't want to be trading this. It only got active when the Americans came on board, right? Americans came on board here. They popped it up, and you made money on this trade, right? So fine, no problem. Let's go back to just Thursday. And what I want to show you is that what's interesting about oil is, yes, you have like this first act in Europe, and something, the first trade fails, but the second trade does well here in oil. But you also, if you go back, like let's say on Wednesday when there was a lot of more activity, right? You also have kind of a second act in oil, I believe. Sorry, now we have to go into replay mode because I think we're going too far back here. These are all cells. Oh, no, in this case, it's all bearish. So I'm sorry, I don't have the trend here is bearish, so you wouldn't be taking all these trades. But what I was gonna say is that when oil is kind of running, there's kind of a second push between 10 o'clock and 12 noon, the European close, where you can also trade big, and it really makes an interesting move. But regardless of how you trade it, those are really sort of European hour trades for big. Now, fortunately, you don't have to get up super early to trade this if you don't want to, because we have another strategy. And let me find my slides here. We have another strategy called Scalper. And this is a strategy that's actually tradable 24 hours a day. So I'm going to show you how this strategy is tradable. And I actually just traded. I just saw that I got stopped on my gold, which is fine, because it was not a time where I was going to be trading this. But Scalper can be traded 24 hours a day, although it has some ideal times, and that's what I'm going to talk to you about, how to trade Scalper. So Scalper has a couple of things. We're trading it around the clock. We again trading on the 1 minute chart, right? We are looking. This is the really interesting thing about how we're going to scalp this. We're looking for price to pull away in one single candle, and you're going to see this on the chart in just 1 second. It becomes very obvious once I show it to you visually. When it pulls away from the 8-period SMA by more than 7 basis points of the underlying, right? So it's a basis point is 1/100th of 1%. So it's just 7 1/100th of 1%. That doesn't seem like it's a lot, but on a 1 minute chart, to pull away from the moving average by that much means that there's a lot of activity, either to the upside or to the downside. So you absolutely want to pay attention when that happens. And then what you're looking for is, once the price comes back and recaptures the 8-period SMA, in other words, it closes above the 8-period SMA, then you want to go long, because that means the whole sell-off period has stopped, and now you have a potential buy period, right? And that's gold. Now, I'm cheating here, because this is the scalper strategy today, and this is one of the traders in my room, Obi-Wan Kenobi, who literally just, trust me, I did not solicit this. I was busy as hell. He traded gold all day long, and I was all quagmired in equities today. But I just want to show you the amount of scalping this guy did today. These were all signals he took off the scalper strategy, just killing it in the morning, killing it in the afternoon, and pointing to me that he said to me, I went from being semi-retired to now being fully retired. Now, he was having a good time. He obviously this pushed him over in his evaluation. I think he's done with the Apex account. But the point is, just to show you, yes, this is today, 12:58. I took a snapshot. It's real because I misspelled everything that I type. So if there's a typo in it, you know that I did not in any way artificially change this. But I don't need to. I can just sort of show you how oil was trading, because how oil was trading, because I want to show you the scalper strategy in real time, and it's an amazing strategy. Here we're gonna stop trading here. So this is the scalper strategy on gold, right? And what you see, and again, I'm going to show you in big exact numbers how this whole thing works. So this is the 8-period moving average, right? And just to kind of let you know, if you want to trade well, really the key to trading well, anything, is to be on the right side of the 8-period moving average. In other words, when prices are above there, you want to be a buyer. When prices are below the 8-period moving average, you want to be a seller, right? And we have a whole bunch of strategies, which I don't have a time today to even disclose to you. If you want to trade pure trend, the momentum, we trade this as well. We can, I go crazy with this today. I actually went nuts today on 2 accounts and how I traded this, but you don't need to. My point being is that there's a very structured, very clean, clear labeled trade here, which is it pushes away from moving averages, recaptures the moving average, you get long here, 31 ticks, you're done. Boom, 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 boom. Today was just, ping pong day. And obviously it was a ping pong day because gold is going to, all-time highs. It's trading really, really well. It took out the 2,300. It's going to be interesting to see. It's going to be fascinating to see how it trades Asia. If we buy Europe, we're above 2,300, right? So Asia typically we pop above 2,300, and then we usually sell it off because they like to squeeze them. But if they hold it, if we're up with 2,300 by European time, above there, 23, 22, or 2, 3, very bullish sign. I think we go much higher. I think it's that's a sign that we're no longer one step forward, two steps backwards. We're like one step forward, two steps forward, three steps forward in a march higher in gold, and that's going to pull oil along with it. You want to be together with oil. So the point being is it's a really beautiful bull market, and there's nothing better than Scalper to be able to capture the bull trend on a scalp basis. Okay, now here's what I wanted to kind of show you. Here's a secret little tool that you can think about. Yes, you can trade one contract at a time, $300. Today there was probably like, if you sort of were very, very careful, right? You traded one and then two and then one and two. Let's just for argument's sake, I don't even know. I don't know. Let me just see. Okay, from here, 1, 2, because every green trade is a resolution. 3, 4, 5, 6, 7. Then it ran away from you. Then it just ran away. So 7. Okay. So if you did this one contract, started with one contract, and you never went to more than 4 contracts, you made 7 times 300, which is $2,100. Okay. If you're trading the standard Apex account, which is what a lot of people in my room like to start out with, which is the $50,000 account, you just need to make $3,000. So in one day, you were like 80% to your targets. That means if tomorrow is a kind day, you're done, right? So super easy, super simple way to basically get funded just trading gold using Scalper, especially in an environment like today. You probably could have done the same thing in oil. Wouldn't have given you as many positive trades, but it could have given you some, right? If you wanted to be super, super, super cautious, and you're the kind of guy that says, you know what, I want to trade my real account, or I want to trade my funded account the way I'm going to trade my real account, because obviously, there's 2 things that you want to keep in mind. To get funded, you can be very, very aggressive, but if you want to trade once you have real money, you obviously want to be a lot more conservative. You could trade this with micro contracts for $30. So you would have made $210. Let's say, imagine now you got funded. Now you're trading your real account. You made $210. You never even came close, not even close to hitting your margin. In the meantime, $200-300. And remember, the first $25,000 in Apex are all yours. So $200-300 every single day, very, very smooth, no problem, right? But coming back to getting funded, Apex, all through the month of April, they literally just before I went on air with you guys, made this rule. Allow you to use one-day funding. Means that you can literally do 1 or 2 trades and get funded in the account, and then be able to then trade it any way you like. Coming back to, remember I told you what's the idea? It's 30 ticks, which is $300 on one contract, right? But on a $50,000 account with Apex, you can have 10 contracts maximum. You literally can take one of these signals, load up the account, go for 3 points, get funded in one trade, right? Now, what happens if if you're wrong, you get stopped out? No biggie. You buy. Apex is giving a massive discount right now, 80% off. Everybody, this week, or actually this whole month, should buy 10 or 20 contracts, because 20 contracts will cost you $300. Some ridiculous, each evaluation test costs less than what I paid for pancakes in New Jersey yesterday. Okay, so think about that. evaluation test gives you access to $50,000 of trading capital if you pass it, right? So you buy 10 evaluation accounts. Every time you see a scalp trade, you just load up the account. It works. It doesn't work, blown account. Doesn't work, blown account. Third account, boom, you're done. Now you still have 7 accounts. You can just keep funding it. This account gets funded. This account, you could fund probably 4 or 5 accounts, which means you could have $250,000 of trading capital. Now, this is not the way to trade real money, but this is an amazing hack if you kind of want to trade evaluation accounts, because Apex is so unbelievably generous in extending this offer. I thought the 1-day pass was gone, but they were like, no, we're going to keep it for all of April. They just announced it. I was like, this is amazing news for the kind of tools that we have. So that's what I basically wanted to show you today. I wanted to show you how cool all the tools that we have in our room are, and how you yourselves can absolutely have an incredible chance of, where's my thing? Here we go. Of being able to get funded with these strategies. You see, I mean, it's not a situation that I want to go backwards. How do I go backwards? This way? Okay. It's not a situation where, it's unique. Literally, most of the guys in my room that are trading with me every single day have already passed many, because they've been running this promotion like a couple of months ago in February, and a lot of people use this opportunity to do this in February. But going back to the whole idea of day trading, going back to the whole idea of prop trading, it's the perfect marriage of two. You want to day trade because you want to be able to control your risk. You want to prop trade because you don't need to trade with your own money. It's an amazing power to be able to trade with Apex's money and have essentially risk be on them, opportunity be on you. It's really, truly incredible opportunity, especially when you marry it with all of these scalping strategies that give you a chance to pass the eval, and then when you can simply go down in size. It's all a matter of size, right? The smaller the size, the less precise you have to be. And when you're trading on a micro, you don't have to be precise at all to be able to continue to generate income, which is really what it's all about once you get funded. So you have like this incredible combination of ability to get funded if the strategies work, then the ability to trade your own account with their money, and then the ability hopefully to extract income on a continuous basis because you're following these good quality strategies. I can't be more excited about this because I love them as a partner. They're just incredibly friendly to traders because of the offers that they're making. 80% off recurring months. The link is over here, bit.ly BK Apex. I think Kathy might put the link in there, but if she doesn't, I'm going to try and see if I could get this link in here. Now, what I was going to say is, if you want to combine the power of the Apex offer with the day-to-day live trading and coaching that comes from Kathy and me, including all of the indicators which you saw here, the whole suite of bounce tools that I showed you, not available. You can't even find it on TradingView because they're private. We don't even show them on TradingView for any display, much less get access to it. If you want access to all of this, you can simply join us as well. So you have like this perfect combination of joining us. You can join us for a month if you want. You can join us for a year. I recommend at least 6 months because it's always a really good time to come in coaching. If you want to, come hang with us, at minimum, I think 3 months is kind of like the right time frame. But it doesn't matter. You can do whatever you want. You can try it out. The links are here. I'm going to send you all the links, obviously, when we do the replay of the play. But overall, it's just a great offer. We discount our service. They're deeply discounting the prop trading. We have the tools. We have the strategies. All you guys got to do is try it out. It's really a lot of fun. It's amazing, amazing fun. I can't tell you how satisfied I get from everybody in my room telling me, "Hey, I just got 300,000 funded. Hey, I got bounce work for me on this." And people are trading everything. But now I think gold is just, gold is truly the El Dorado. It's really proving its mettle. I think it's the trade of 2024, and the ability to be able to trade it with with these instruments. You don't even need to do anything more than gold, to not just get funded, but to actually trade the account on a day-to-day basis. So I'm going to stop talking because I can't anymore. If you guys have any questions, please post them for me over here. In the meantime, let me see if I can extract. Let me see if I can do this. Escape. I'm going to give you this link. Let me see if I can get this link. No, why can't I do this? All right, I'm just going to copy this like this. We're going to go to do this old school. And I'm going to send it to you guys over here. But obviously, yes, everybody's going to get the link in the email as well. So this is the link to our service. And the most important link, the one that you really want, come on, here it is. Okay, here's the one I want, is this one. I'm going to send that to you, BK Apex or BK BK Save. Actually, I think you can use the words BK Save for the discount, and you'll be good. We'll send you the information again. But I hope you guys will join us. It's an incredibly fun journey. It's really deeply discounted right now. So somebody's saying, is it relevant for CFD traders to watch the CME watch tools for futures, or does CME have other watch tools for us? You can watch that. But Franz, why are you trading CFDs, man? CFDs are so 2002. They're so yesterday. Dude, man, come over to the light side. Futures are amazing. Look how easy it is for people to get funded here. You're never going to get funded in one day on CFDs. Dude, I'm telling you. One trade, one fund gold tomorrow. Again, we're going to do this live tomorrow. I'm going to load up 4 or 5 accounts. We're going to just find the scalp trades during live trading. I'm actually maybe go for 2 hours live trading. And we're just going to do that. I'm just going to blow it up. It's awesome. It is so cool to be able to do that. You just can't do it in any other instrument. You don't even have the liquidity to do that in CFDs. The 7 period, the 7 period stretch is basically a level that shows that prices have really stretched away from the mean, from the moving average. And if they come back to that mean, then it's a chance that there's going to be a reversal in the trade, right? Especially during high liquid hours. So 3 o'clock in the morning, 4 o'clock in the morning today, you bet your bottom dollar I'm going to be looking at gold. I'm going to be trading gold. And if gold, as I said to you, if I wake up in the morning today, and Europe is open and we're trading above 23, you gotta be trading that product. It's going higher. If it's below, different story. I'll give it plenty of room. It may need to consolidate. But right now we have the classic pop and drop in Asia, right? Where's gold? We have the classic pop and drop in Asia, up and down. Asia gap open on the open, and they drop it out. But notice, they're kind of holding it right underneath here. They're holding it on the 2300. Let's see if there's, if there's more support here. But I think it's going to be relatively quiet now until Europe comes online, and then 2 o'clock in the morning, 3 o'clock in the morning, my time, when Europe is online, it's going to be a free for all. And then tomorrow, I think it's going to be a strong story. Gold fresh all-time highs. It's going to start making headlines. We're not even close. Barron's hasn't put it on cover. The Economist hasn't put it on cover. We're far away from bubble territory. So I think the trend to the upside. We could have 4,000 or 5,000 more points out of gold here before it really gets crazy and parabolic. That's a huge amount of money on a contract. Because remember, every point is $10. Every dollar move is $10. And if I'm arguing there's going to be 500-point moves, that's 5,000 point moves per contract. So it's just a lot of potential future profit here. Yes, this is actually TradeOvate on TradingView. I'm trading a TradeOvate account on TradingView. Yes. and it's it's all obviously the good thing is it's all free. Quotes are all free. It's just it's beautiful. Like literally, you just pay for the evaluation, nothing else. Everything else is totally subsidized. It's the greatest deal ever. It really is. So that's it. Any more questions for me? This question is between Rhythmic and Trade-Evade. Do I know the difference? Of course I know the difference. I have Rhythmic as well. If you want to, let me see if I can show you my Rhythmic here. Well, let me see if I can drag it in here. Hang on. I don't know if I can drag it. Hang on. Let me just grab it. I have to minimize this. Hang on. So you see, okay, so this is Rhythmic, right? We actually have, not only do I have Rhythmic, my friend, we actually wrote the Scalper into Rhythmic. This is the Scalper trade. I think this is gold, right? Yeah, this is gold. And we actually have the same kind of, signal on Rhythmic as we do on Trade-Evade. But yes, Rhythmic is, I think, for more advanced traders, and it's definitely complex, and it took me a long time to kind of get organized in it. But oops, sorry, where am I? Let me bring this up. But great product. But everybody loves to Trade-Evade. Everybody loves to Trade-Evade. That's that's sort of like the primary thing that everybody loves to do. I'm going to leave you with this offer, guys. Great offer. It's like I said, the way you want to capitalize on this, you get 10 accounts, right? You trade some small, some large, some one strategy, some another strategy, and then if you want to, you just go, go for broke. Take 2 or 3 accounts, one trade in gold, one and done, get it done. It's a super fun strategy, and we certainly got the tools to help you do it. Okay. Is there anything else? Let me see if there's anything else. Are you guys good? Okay. So I want to thank you so much. You guys have been really kind to come hang out with me today. Hope you guys really enjoyed this. This is all obviously going to be recorded, and if you sign up for it, we're going to send you the link. We'll send you the discount links. Be sure to take advantage of them while you can, and coming into my room and come hang out with me, and I'll show you how to how I do this. I trade this live every single day. I have my own accounts. I trade it live every day. Well, are you going to get Zip? Yes, you're going to get Zip also. You will absolutely get Zip. Yeah, Scott said he just ordered. Good man, Scott. Come into my room and then we'll trade together. Yes, you get Kathy's as well. But remember, Kathy primarily trades Forex, and Forex is really not a futures product. So my tools are much more designed towards the prop test. But of course, you can trade CFDs as well. That's the beauty of it. You can trade Forex with her as well. You can get 2 for 1, all of this for that big discount that I sent to you, the $145 per month, which is very cheap. So that's what's going on, guys. I can't wait. I'm already staring at the gold chart right now, seeing hey, I think I want to buy the 2300s before I go to bed, just because I see the opportunity there. But I'm very excited. I'm going to trade tomorrow like a maniac. I'm going to trade like crazy on Thursday. So if you guys want to have fun, come join us. You get access to all these tools. You get access to all the trades. Make sure you get I would get the Trade-Evade accounts. My recommendation to everybody who is starting out, get the Trade-Evade accounts. It's much easier. They're all web-based. If you're on a Mac, you can trade this. It's just it's far less of a learning curve than to do Rhythmic. If you're very advanced and if you're happy with Rhythmic, I got the tools for you there as well. So it's all cool. All right. So Jeanette is saying, I'm amazing. Jeanette, tell him I did not pay you. Jeanette says she's doing it because she's a little novice. Yeah, Jeanette hangs out with me every day. We have a lot of fun. I'm really excited. I'm so stoked for gold right now. I cannot tell you. I think we are just starting the moon. To me, it's 10 times more interesting and exciting than crypto. It's listed. It's the market is 1 penny or 1 dime tight, right? You can buy. And the other thing is we didn't even talk about the fact that in futures, I buy bid, sell, ask. I'm always buying bid, sell, ask. That means I make spread in futures, which is what you can't even do in CFDs. So lots of stuff for you guys to consider. Thank you so much for everything. I will see everybody hopefully in the markets, and be sure to sign up with Apex, who are our good buddies who made this really possible for everybody. I'll see you all tomorrow, hopefully. Everybody enjoy. Take care.